CEO, RDS Wealth Management. Thanks for being here. Some of your thoughts on what's going on here in the stock market.
Hey, Nicole. So, I think what's taking place right now reminds me a lot of a childhood game that we all used to play called musical chairs. When the music would start, all the kids would get up, they would run around, dance, play, have a good time. And then the goal is to make sure you find a chair after the music stops. And I feel like the music is certainly playing, and it continues to get louder in the market. We're all having a good time. But when the music stops, we've got to find a safe place to be, or we're going to tumble with it. The problem is there are a lot more people at play right now, Nicole. A lot more people have entered the game than ever before because we have this market continuing to climb. I'm optimistic about what I saw just recently with over $7 trillion still sitting on the sidelines. So if we do see an immediate snap down, we should see it snap back up. I'm hoping that's the optimistic view at least. But when I'm talking to a retiree, Nicole, the objective is to make sure that we realize losses can hurt you more than gains can help you. And this is why we believe that you should be a little bit closer to the chair if you also believe the music is about to stop.
Understood. I mean, there's a lot of money on the sidelines, to your point.
A lot of money.
Should people be putting that to work?
Yeah, so I'm a big proponent of buying a really good, if you like money on the sidelines right now, buy a strong, let's say SVXX. SWVXX is the ticker for this that I would recommend. But a strong money market fund right now is still paying you 4.5%. If you're in that type of money market position, you have the immediate liquidity that you desire to put money to work in a downward market trend, but it also gives you a little bit of yield while it's setting on the sidelines. That's a really good place to put money if you believe you should actually be on the sidelines. And Nicole, I'll give you another place to maybe put some money as well. If you think the market's going to continue to climb, but you're a little bit skittish, maybe over the next 6 to 12 months, we could see a pullback. A place like PJAN, I believe is the ticker, PJAN, gives us 15% downside protection on the S&P 500 and still gives us a very healthy dose of the upside participation, as much as a 10 or 12% upside participation if the market continues to climb. And if we do see the market take a nosedive, let's say it's down 20% 12 months from now, your portfolio has only suffered a 5% loss. That's a safe place to kind of be beside of your chair if we go back to my first analogy.
Hard to know when the rally sort of stops, right? Because we have another winning week for tech. We've had an incredible year. Does this kind of rally continue? And so you have this money on the sidelines. You're talking about money market funds. You do have some picks that I do want to get to, names like Tesla and Exxon.
Sure.
But does the rally continue?
I think it depends on where you are in your journey towards retirement or towards your goal, Nicole, as to whether or not you continue to maybe look at picks like we're about to discuss. But to directly answer your question of does the market rally continue, I think there's some major headwinds. And why I'm so concerned and why I've shared this sentiment with you time after time for the last 3 to 6 months is because I believe that the Fed is not listening to some of the data that we are getting that's telling us inflation is not quite yet at bay. I used an analogy once before that it's kind of like putting out a wildfire. We still have some embers that are still maybe red. They're still hot. We know they could spark at any time. And with things like tariff wars on the forefront, and we just got a PPI reading that showed us the price of eggs up over 56%. I mean, that type of stuff hits Americans where it hurts. Inflation, if it takes a rise, and we see mass deportation, which hurts the labor market, we could be discussing terms like stagflation again, which nobody likes to hear.
Right, understood. Let's get to some of your picks. I know you have Lockheed Martin, Tesla, and Exxon. Let's start with the names in aerospace and defense. Lockheed Martin.
Yeah, I think if you're looking at how the Republican presidency typically treats defense stocks, it's always a favorable relationship. We've got the talk of war all over the country. We can buy Lockheed Martin right now on a dip due to less than stellar earnings. I think they had a jet project that was delayed. It caused a little bit of dip in that particular stock. And Nicole, if we can buy that right now and hold that with a 6 to 12 month type of time horizon, I think we're going to like the way that we see us pull out of this potential dip in Lockheed Martin, simply because of the relationship with a Republican presidency.
I see. What about a name like Tesla? Some of these Mag 7 names have really run up. There are even people who are saying, I don't want to touch them for next year, but people who love them and say, look, the momentum's hot. Where do you stand when it comes to Tesla?
If we're going to speculate, let's speculate big. And I think Tesla's, again, their CEO, Elon Musk, and his relationship directly to the president is certainly going to be a beneficial thing for Tesla owners. I have not been a big fan of Tesla. Of the Mag 7, I haven't really called Tesla the winner, but it has shot to the moon. And to use another Elon Musk business, it's kind of like SpaceX. I mean, we've seen it go to the moon in the last couple of weeks, even the last few months. And I believe that has a lot to do with what we're seeing happen in a Republican administration, where we will likely see less government subsidies for things like EVs. Now, Tesla got to where it is because of government subsidies. And if all of the competitors are not allowed to get these government subsidies, it places Tesla right on top of the hill when it comes to who the best EV may be 5 or 10 years from now. I think they're the king of that hill for quite a while. And this is a good time to buy, especially considering maybe the more tactile way of looking at this chart. You think about it just breaking out of its 2021 highs, that could be a good sign that it could have a lot more upside potential.
And last but not least, Exxon. Why Exxon?
Yeah, am I allowed to have Exxon and Tesla in the same watch list, Nicole? I think that might be a sin somewhere. Exxon is going to benefit from this American first mentality. I'm a big believer in Exxon anyway. With our clients, we're looking for a lot of income type generating stocks. Exxon has a very strong and increasing dividend year after year. That's a good reason to own Exxon by itself. But when we think about bringing things back home, Nicole, and we wanting to be the major exporter, the number one exporter in the world of oil, Exxon will be a beneficiary of that. And especially right now, buying it at around 10% off of its highs, now is a good time.
Yeah, Dale Smothers, RDS Wealth Management. Dale, thank you very much. Great to see you.
Thank you, Nicole.
Appreciate it.